In this video we're going to talk about the rate of change indicator. Stay tuned. Hey traders, a very warm welcome to you. So I've got up here US dollar CAD chart, daily chart, so each candle's a day, and I've got the rate of change indicator set to a period of 12. First of all, what is a rate of change indicator, and then most importantly, how can we use it to make better trading decisions? I've screenshotted this from another website to show you exactly how it's calculated, and then let's try and think in our minds of what that means for the indicator and how it works. So it's basically a rate of change is telling us how quickly price is moving in percentage terms. Now obviously if we've got it on a currency as opposed to a stock, we're going to get different readings. You know, stocks can move 10-20% quite easily. For a currency to move 10 or 20%, it is not likely. So we kind of can normalize it based on what we're expecting for the price, but ultimately it doesn't really matter in terms of what that number is. It's a case of how far and how fast price has moved. And if we look at the calculation here, so the rate of change is the close today minus the close n periods ago. So what did I say I had my setting on? I've been messing around with different settings. I've got it on 12. So in other words, that's the n for this example is 12. So the close today minus the close 12 periods ago divided by the close 12 periods ago times by 100 to give ourselves that percentage. So that's how it's calculated. So you can see that you know, ultimately, if we're kind of at a peak where we were 12 days ago, we're going to get an extreme. And if you look at this US dollar CAD, let me just flip that off the way so we can see. You know, we've got a level here of about 2.8%, it says, and you know, that is quite a big move. So that's going to probably be the 12 days. So in 12 days time, we're right at the high. And then you can see how much it moves down as we kind of move from the day 13, day 14, because ultimately that's moving that marker up 1 day each time, because it's only going back 12 days. Now what we can do is we can obviously make it longer. We can go to something like 21 days to give us a little bit more of a longer period, or we can even go right back and sort of say 150 days or something. That's going to give us kind of half of a year, something like that, depending on what we're trying to achieve. Obviously, shorter the time frame, the more kind of aggressive we are, looking to grab those swings and scalps for kind of a little bit of extremes. Longer period is going to give us maybe an indicator of, you know, how much the trend has moved over a year, half a year, month, or if we're on a lower time frame like a 5-minute chart over a number of days, as opposed to maybe the last 15 minutes, 20 minutes, or whatever. And we'll talk some intraday stuff in a second. Let's go back anyway to our 12 period for now, and let's have a look and see how it changes. So this is a good example actually for CAD. We can use this as an overbought and oversold extremes kind of thing, as we would do with all these oscillating type indicators. Is, you know, when they move too far too fast, we're looking for an unwinding. So in this first example here, we've got CAD has moved, you know, from a low point up to a high point very quickly. In a 12-day period, it's moved a lot, you know, whatever that number is, 2.8%, 3%. That is kind of enough for it. It's time for it to unwind. Now in this case obviously it does go lower, but congestion is equally going to mean that rate of change narrows down as the price catches up to that congestion. So the theory being is we're going short, or we're covering our longs at the overbought condition, and we're going long or covering our shorts at the oversold condition. So as we push to a new low here, you're going long. As you push into highs, and you can see it's not too bad at sort of pinpointing the areas where potentially price is running out of puff a little bit, running out of you know, movement. And actually on this downside here, yeah, a little bit early, but still it gives you a sort of a guide as to, hey, we've come a long way, something's going on. Maybe I need to at least be very careful or cautious and use a filter and say to myself, okay, well, if we're at the highs, I've got a good idea where a high level is on the CAD. I can just look at this, and obviously this is where you're going to eyeball your particular chart and put it into perspective with your particular chart. I can say that I know that's a reasonably high level for the US dollar CAD or whatever chart I've got in front of me. So I'm not going to chase the market if we're in that condition. I'm going to wait for it. I'm going to perhaps wait for an unwinding back to the 0 level, or perhaps to a different level, and just not be involved in chasing the market. So one way you can do that is overbought, oversold conditions. Not really overbought, oversold, but extremes really is what we can do it. Another way we can trade it is when we're crossing the 0 line. Let's have a look at it's kind of a stock. Let's have a look at something like Amazon, for example. So you can see a big extreme move here. You know, the real low extremes, we've moved like 8%, which is probably from that close down to where we are. If you put it into the calculator, you're going to see that's an 8% move. Big extreme moves, but the same kind of characteristics. You know, even if we're in an uptrend, which we have been from this sort of period onwards, you can see it just really gives us an idea when we might congest. High level here, congestion. You know, pull back to zero might be a time to look to get involved with the move, or as we cross, you know, down the other way. So we've had an uptrend and we're looking to reverse it. Maybe you can look to get involved on the short side as we cross the zero line, because the point is it's a sort of strength of trend. How quickly is a trend moving? How quickly? How far is it going? So it matters that, you know, it's even if we do it in a short period of time, that's still going to give us a good move on the rate of change. It's going to be more indicative of the strength behind it, and obviously continuation and keep push. And in any strong trend, you're going to get constant movement, and it's showing us how far it's moved from that period, from that end period, end days ago, however we got it set. So again, high here, rate of change is peaking a little bit. It's come a little bit far, pushed up kind of 7% move. That's calmed everyone down a bit, congested a little bit. Then again, we've pushed on again, another kind of 6% move, calmed down again, another 6% move. Coinciding with that high there, calm down again. So it's a nice little tool to say, hey, stuff's moved a little bit far. Is it due a consolidation? Is it due a pullback? Is it due at least a breather? And then sort of deciding on your trade from that. Another thing we can do, guys, is we can put in a couple of them. So if we're looking at where are we? Rate of change. If we're looking at a longer term trend, we can adjust it and say, okay, let's have a kind of 63, which is probably about a quarter here, and then let's have a 12 or a 21 here, and let's see how they kind of push together. When they're both in an extreme, maybe we want to be a bit careful. Perhaps when one's crossing and the other's still moving up, we can be okay with it. We can play around with it. We can adjust it, because all we're doing is we're taking a benchmark of short-term. I'm not going to say volatility, because volatility is in both directions. Short-term kind of momentum, or rate of change is known as momentum. Short-term momentum based on long-term momentum. So let's say long-term momentum was very, very flat, then all of a sudden we had a short-term momentum burst to the upside or downside. We might think that if we're combining it with a chart pattern, let's say a congestion chart pattern, a channel, triangle, wedge, something like that, and we get the rate of change moving, that might give us a little bit of a heads up to say, okay, you know what, things might be changing here. We've moved quite a bit. Let me get involved and wait for a little unwinding of the rate of change. Let's see where the price is relative to the rate of change. Let's put all this stuff into perspective and then go in thinking that, hey, we have seen a good move. We've consolidated now. We're still holding at highs. Let me push for another leg, or whatever it may be. So that's rate of change, guys. I like it. Interesting little tool. Mess around with it. I know that very quickly Linda Bradford Rashke did a rate of change. I believe she did a 2 period. So that was really kind of looking at how price was moving for a 2 period, and then looking for the third day to kind of unwind. So if you had 2 solid days of move, or maybe it was 3, feel free to Google it. It's just off the top of my head. But as a more of a short-term trade, when you've got an extreme move over a 2-day period, let's go to something like DAX, for example. When you've got an extreme move on your rate of change 2, then you're going to look for a consolidation for your next day. So in other words, rather than just sort of going blindly short or blindly long, you're going to say, okay, we've had 2 good days of move. Now maybe I'm going to fade. Maybe I'm going to fade kind of moves to double top. So we've had a good move. Now the third day, maybe if we push to highs, I'm going to fade it for an intraday trade. So she used it as a kind of filter to give her an idea of potentially what was going to happen the next day. Not going to be likely to be a trend day, more likely to be a congestion kind of day after we've had the rate of change spiking so much. So some real different ways of doing it. I'll just go and do some research on it yourself, and if you come up with any cool and innovative ways of using it, stick them in the comments below, because I enjoy learning what you guys are talking about as well, and I continue to learn different things. And you know what, same with all indicators, guys. Some of it you look at and go, not for me, I'm not interested. Some of it you look at and go, yeah, that can play a part in my trading strategy. So good trading, guys. Give it a thumbs up if you liked it. Otherwise, see you in the next one. Take care. Bye bye.